Hello everyone. In this particular video, we are going to study the equalization levy. From the exam perspective, there is a guarantee of 4 to 8 marks from this chapter. Okay, now let us see the need for equalization levy in India. For an example, let's take an Indian company and a company incorporated in United States of America. The Indian company is making payment to the US company for the purpose of digital advertisement. The amount paid by the Indian company for the digital advertisement is allowed as deduction while computing the income tax. On the other hand, the income earned by the US company is not taxable in India. This leads to the need for equalization levy in India. Okay, now let us see the two types of equalization levy, its applicabilities and the non-applicabilities. Firstly, Section 165, which deals with payment for online or digital advertisements. Secondly, Section 165A, which deals with supply of goods or services through e-commerce platform. Under Section 165, the supplier should be non-resident and he should not have any permanent establishment in India. Under Section 165A, the supplier should be the e-commerce operator and not having permanent establishment in India. Under Section 165, the recipient should be either the resident and carrying on business or profession or the non-resident having permanent establishment in India. Under Section 165A, the recipient should be either resident or the person whose internet protocol address located in India, or in case of advertisement targets a customer who is a resident or whose internet protocol address is located in India, address is located in India. The equalization levy under Section 165 is not applicable if the aggregate payment for the advertisement is up to Rs 1 lakh, or in case of supplier being non-resident having permanent establishment in India, or the advertisement is not used for business or profession purpose. Equalization levy under Section 165A is not applicable if the turnover or the gross receipts of the e-commerce operator from the specified service is less than Rs 2 crores, or in case of e-commerce operator having permanent establishment in India, or cases where Section 165 is applicable. Under Section 165, the equalization levy is required to be deducted at the rate of 6% by the payer. Under Section 165A, the equalization levy is required to be collected by the supplier at the rate of 2%. Okay, what if the equalization levy is not deducted? In such case, 100% of the expenses on which equalization levy is required to be deducted shall be disallowed. Okay, now let us understand the equalization levy under Section 165 and 165A through an example. Let us take Master Limited is making payment to the following non-residents. The first payment of Rs 2 lakh is paid to the Facebook Incorporation for the purpose of digital advertisement. The second payment of Rs 5 lakh is paid to the Walmart Incorporation, a e-commerce operator, for the purpose of purchase of services. In the case scenario 1, let us assume both Facebook and Walmart Incorporation have permanent establishment in India. In such a case, the equalization levy is not applicable and the normal provision of income tax shall be applicable. In the case scenario 2, let us assume both Facebook and Walmart Incorporation does not have permanent establishment in India. In such case, the equalization levy would be applicable. The Master Limited is required to deduct equalization levy of Rs 12,000. The Walmart Incorporation is required to collect equalization levy of Rs 10,000. If you want to download today's lecture in PDF form, you can download it from our Telegram channel. The link of the Telegram channel is given in the description. You can check it there. Okay guys, we'll see you in the next lecture video.